honestly, I cannot wait to see what our guest speaker has in stock for us. So please drop in the comment section what you hope to gain from this webinar, whether you want to learn the basics of stock market or whether you want to understand market trends and how you can be able to, grow your portfolio for stocks, or how you are going to navigate the whole ordeals of the stock market. Please drop your messages in the chat room. I'm still waiting for more people to join the call. We'll just give a grace of about 5 minutes and then we'll start in full. My name is Oluwapemi Adekule, and I'll be the one moderating this webinar. And I hope you are able to, stay and enjoy what we have in stock for you. And also, please, I hope your notepads are close by because you need to jot one or two. It's money moves, and we want to learn how we are going to make this money. So please, tell your friends, tell your colleagues who have registered for this webinar to join because we don't want to start without them and we want everybody to gain from this. So we'll just wait for about 5 minutes and ensure other people join us before we get started. All right, I can see our numbers are up already, and honestly, we have a lot in stock for you, so we want to get started as soon as possible. Okay, so mentioned earlier, today's theme is about to smarter stock market trading. And what we are hoping to learn from this webinar is we want to learn the basics of stock markets, how we as investors can be able to make good returns on our investments. We want to understand the market trends. We want to be able to know how we can trade and get good returns back. So in this section, like I said earlier, I want everybody to, take the time to listen in, and also you can also take down your questions or drop them in the chat room, and we'll be able to attend to that at the Q&A section. And also in this webinar, we are hoping to learn technical analysis to evaluate ways to understand the supply and demand of the market, and different trends in the market, the price changes, the volume, and all of that. So at the end of this webinar, I'm very sure we'll be able to make smart money moves. Okay, so starting here, we are going to have a brief introduction about who we are at PAC Securities before our guest speaker come on board. Then also after that, we will have the Q&A section and then the closing remarks and any other comments from you, our guest. All right, so to start with, I'm going to call Mr. Abidemi Oguntun Tunoshte, is the head operations and trader at PAC Securities, to give us the opening remarks. Mr. Abidemi, over to you.
Good morning, everyone. Can you hear me?
Yes, we can hear you loud and clear.
Okay, good morning, everyone. You are welcome to PAC Security. Okay. Can you see my screen?
Yes, we can. Yes, sir, we can.
Okay. Thank you very much. Okay. You are welcome to PAC Security. Who we are at PAC Security? Yes, PAC Securities is an authorized dealing member of the exchange, and we are one of the successful stockbroking firm in Nigeria. We participated in high-profile transactions, and we manage clients from the retail end even to HNI end of the clients. We are very customer-centric at PAC Security. I've had situations where some of our clients will tell us that, oh, They have been with us since our inception from 2006. And we believe in fostering this relationship and to continue in it. We are into the business of security trading. And then, part of our uniqueness in the market is our PAC trade book, which is an online trading access where all our clients can have access, direct access into the market. Then I go to our visions and mission. Our visions is to be Nigerian preferred security trading. That is, when you talk about stock trading, you talk about PAC Securities. And our missions is to exceed our stockholders' expectation by prompt execution of mandates, and we offer sound investment advice. Those of us who have been doing transactions with us can testify to this. Once you give us a mandate, we execute it promptly. And, in a few minutes, if you are conversant with your mail, you get your contract note and every other documentation relating into your transactions. Then our core value, of course, is in alignment with our holding group, which is a service with passion. In other words, we deal with the business of security. We are very passionate with it. We are very professional. We deal with it professionally. Integrity is also there. The business of financial market is about integrity. If I tell you A and you discover that is B, you will not trust me. You will not trust any of our team members. And that's why we hold on to this keyword. We have what we call respect for individual. In our dealing with all our clients, whether young or old, we respect individual differences. And we come up with innovations and teamwork. Part of that innovation is our PAC trade book, which I talk about. We are trying to leverage on technology to assess the market from anywhere you are, from the comfort of your home. You don't need to necessarily come to our house. If you want to come to our house, that's fine. Our door is open. But from the comfort of your home or your houses or your office or your shop or wherever, you can also, actively partake in the market. Our services are majorly into three. We are basically into stock trading, that is equity and bond. I know that a lot of us are not, are focused on the equity aspect. But if you know your level of risk, that you are not, you are a bit of risk averse, there's some bond. Federal government lists bond every month, which we also send notifications every month. And then if you don't want to buy that, you can also, buy it directly in the market. Once we have your mandate and of course, you pay into our account, we execute your transaction. Another service we do is portfolio management. You see, the ultimate aim of every investor is to grow their portfolio. In other words, let's say your total value of investment is 1 million this year. Maybe by the end of the year, you will be looking at having at least more than that 1 million, maybe 2 million, 3 million. And, from time to time, as you do transactions, you begin to increase this value. This does not mean that if you are trying to build your portfolio that you cannot sell. Sometimes when you have a need, when there is need arise, don't forget that one of the beauties of this market is the liquidity. If you have a house, if you have a car and you want to turn it to cash, you might not be able to do that for weeks. But if you have your investment in stock, give us your mandate, we sell it, and then we'll be able to raise cash for you. And then when you discover that you have surplus in your account, then you pull the money back. By that, your portfolio is growing. And we're also into investment and financial advisory. In other words, we advise clients on possible areas of investment with positive net present value. When you are buying stock, we ensure that you buy stock that are going to offer you dividend. This is dividend season, and one of the benefits you get is you invest in stock that you get dividend at the end of the day. Our competencies. Of course, we have management policies, strategies, and procedure, monitoring stock performance, the economic and business environment that affect them, advising clients on market sensitivity likely to influence the share price, and providing general investment and financial advisory. Now, this is the way we do this. If you are our client, you have registered with us, we update you from time to time. One, in the morning, we send you economic news so that you have an idea of what is happening in the market. The stock market is something that has to do with information. And where do you get that information? You get that information from what is happening around us, either in Nigeria and even at the global level. We advise you based on, what is happening, what is likely going to affect the value of your investment, because our ultimate aim is to see that you grow in your investment value. And then lastly, of course, like I said at the beginning of this slide, that one of the unique thing about PAC Security is our online access to trading. We have an online trading which we call PAC Tradebook, whereby if you register with us, or if you have not traded for some time, you activate your account, we are going to send a login details to you, whereby you can access the market. You are going directly into the market to have a view of what the market is going to be. You can directly buy yourself, and it's very simple. You fund your account. Once you fund your account, like in a few minutes, your account will be credited, and you log in directly and see how the prices are going up, and you see how the prices are coming down. Now, I know today we are going into mastering technical analysis. It's a roadmap to a smarter stock trading. We believe that one of the reasons why you can enhance the opportunity in the market is to have access into the market. And we have uniquely planned this webinar in such a way that from this training, you will get an insight. And then from time to time, you will be monitoring what is happening in your investment. And then you will discover that you are good to go and you are making a better return that like you have been doing before. So this is what we do at PAC Security. Without much ado, I will hand over again to Oluwapemi, who is going to call on the next sections of the webinar. Thank you very much.
Thank you so much, Mr. Abidemi. I mean, that's a brief summary of what we do at PAC Securities. We are all therefore our clients to be able to invest wisely. You get access to, investment advice. And also we have different investment types that you can do depending on your risk tolerance. Thank you so much, Mr. Abidemi, for that. Okay, so before we go to the next section, I mean, that is why we are here. We want to learn the ropes in the stock market. Okay, so a few house rules. Please ensure that your mic is muted. And also you can drop your question in the comment section during the presentation. Also, we will also share our contact detail for PAC Securities in the chat room for you to reach out to us any day, anytime. All right. So the next on board is for our guest speaker. So who do we have here? We have Mr. Ambrose Omodion, is an experienced investment and company analyst with over decade of industrial expertise. He first gained a strong followership as an equities analyst at StockWatch, and later continued to build his reputation through his independent investor column, a popular 4-page pullout in daily independent newspaper. As the chief executive officer at Invest Data Consulting Limited, Mr. Ambrose leads regular training sections for investors, offering a practical do-it-yourself approach to equity investment. His weekly webinar also engage Nigeria's investment community, providing insights and addressing key market issues. He's also an associate member of the Institute of Pension Administrator, a fellow of Institute of Professional Financial Managers UK, and a London and South Africa trained fundamental and technical analysis. So, I mean, I believe that with Mr. Amber's profile, you know that we have a lot in stock for you for this webinar. So please join me as we welcome Mr. Ambers. Thank you. Mr. Ambers, you have the floor, please.
Yeah, good afternoon, good morning, and evening, wherever you are joining us at this hour. I will say big thanks to PAC for your this opportunity to share knowledge on equity trading, especially using a technical analysis as a point of looking at the market. You can't only use technical analysis; you can combine the two with fundamental and technical sentiment report. But today, I'll be looking at what technical analysis. I will say welcome again. Let me share my slides so that I will start from there. Like the topic said, mastering the technical analysis for evaluating what trade. Don't forget that when you're mastering anything, you need to understand the foundation before you move to the roof. That is why I need technical analysis. We don't play with what we call support level and resistance level. And that's just like the topic. You must know the basic before you talk of what, knowing what the advanced. And today we'll look at the necessary ones you need, the basic that will guide you, even though you're a novice investor, be professional. We need to know all these basic things that at the end of the day, you're able to make what informed investment decision that will impact your portfolio positively. Because every investment is against the future to grow wealth. Nothing is more than that. Because we are not in the market to watch the trend, you have to take advantage of the trend and create wealth for yourself. That means once you understand the trend in the market, you know when to be in the market, you know when to also to exit the market. I will tell you that we don't trade often as a trader. There's always a sign for you to know when to plug. Like this, people say, if you want to catch a fish, you know the right time to bring your fish, no instrument to go to the fish and go. Also, it is an equity that you must understand what the trend is going. The trend against you, or is the trend in favor of what you want? That's why you must understand. Before we go, let me share my slide so that we can start from there. Are we all there?
Yes.
Okay. Why I decided to start from there that you do not like to calculate or worry yourself about calculation when it comes to technical analysis, because you're going to deal with charts, lines, and volume and prices. You don't need to sit down like in fundamentals where you say that you have to do either one P ratio, you do do what we call a valuation. No, in technical analysis is purely looking at charts, looking at volume, and looking at price, and that's what I want to discuss today. And in this effect, I'll tell you that as a technician or a chartist, you must understand the basic of technical analysis, and that is where I'm starting from today. But those basics are about you understanding the function of price, function of volume, and function of what people's sentiment, which is investors or the psychology of market player. Like I always tell you that in my forum that if you want to be a successful investor, you must understand how to combine technical and fundamental, which I said earlier here, or you go beyond fundamental and technical. Sentiment of people in the market, the psychology of players in the market today. You must understand how you follow that trend, that sentiment to make sure that you are ahead of others in the market. And also don't forget that because Nigerian market has become sophisticated, what I said technology is driving our market today, so that many players in the market are also using technical analysis as you also do things. That means you must understand the one that works for you and how you can take advantage of the market so that at the end of the day you will be on the winning side. Because as a professional, I'm looking at technical analysis. PAC as they over there, as their training is going on, we're going to bring out some people that are going to train in that house. Looking at technical, also in different house that I know. That means you must set your own target where you are entering and where you are exiting. And that's just tell that also when it comes to technical analysis, in picking price, some people say they look at fundamental and all, and I'm not against it. What is that? Because in picking price, I call it watch list. You might use your fundamental to pick price. Oh, this is a good stock. This is the stock I want to buy. But the price to enter that stock, the price to exit that stock will come from your technical analysis. That is why, for example, there was a time Nestle was leading in the market with high price, and people were saying, oh, because Nestle has a multiple product line, yes, they are doing well. But there was a time also the stock remained stagnant before we start seeing losses in terms of FS loss that brought the stock low. But doesn't mean that the fundamentals of the company have changed. For me as a trader, I will see the move to see that this stock can remain stagnant for a while. Looking at my chart, I will say no, I won't trade this stock, and that is why you must combine the two at any given time to know exactly what you are doing in the market. Like I said earlier, that you don't need to do any calculation, or you don't look at your chart, and that is why these are the things that are very important when people are doing a technical analysis. You must have your laptop, your charting instrument, which I'm going to use in this class. Also, there's other free ones you can see on different sites to help you to make it like what we call a trade view TradeView.com, investing.com. You can see all this, study of the day. It will help you to make a call. If you don't have access to chart, the software, you won't be able to follow the market. You will be using same lines that will draw either the newspaper or you are drawing on Nigeria Stock Exchange, seeing the index moving. But if you really want to look at the chart, you must look at having a laptop, install your software. But if you don't have the software, go to site that have charting a platform in their site and also follow it. Also, you must also concentrate, be disciplined, be committed, and be also. These are the things that you need to do when you are determining anything you are doing in life to go far. That's why you must pay attention to what we're going to discuss today, because I tell you, these are the things you need to know when it comes to what technical analysis. You need to understand how to read the fundamental of any market, and which is what financial market will mean. Here, financial market has two ways. Either you are looking at the long-term financial market, also the capital market. Even when you are looking at the money market, short way. But which one are you trading with your chart? Even though you are trading bond, you are trading commodity, you start to know to do that. But here in Nigeria, I think the most active market that I still can use chart is our equity market. Our bond market is active, but I tell you, most of the retail investors don't play in that space. I'll tell you, the bond market is small. There are two types of financial market, that will have the long term and the short term. But most time in Nigeria here, we do more of the equity market because of the number of retail investors. Why we have institutional investors? But because of also that the bourgeois, the banks are the ones that do a lot of bond. Most retail investors, only few play actively in the bond market, but you can see that most of us are purely doing equity here. That is why we must understand that the importance of chart and all this is very, very important. And also in using chart, it don't mean that you neglect your fundamental analysis. Is very, very important. And that's why for you to be a successful investor or trader, you must actively play the market and also combine these two, the analysis to make informed investment decision. Your commitment is very, very important. At the same time, how you think, that is also very, very important in any situation, especially when it comes to equity investment. In this simple form, this is how to go. Take analysis, it's a chart analysis. Like I've said earlier, that's what we call it chartists. I also call it technicians, what you want to call them. The study of what market price action to also predict the future action or future direction of the market. These are the basic things you need to know. And also there's a kind of what we call a comparison or difference between the two. And you can see that for technical analysis, it focuses on the future and what is happening. Why fundamental of any analysis, either economic fundamental or corporate fundamental, they are pointing what at the back, what has happened. That's why personally I do more of what on technical analysis. I want to know what is happening on the floor of Nigeria Stock Exchange by using what live chart to see how prices are going up and down, how investors in the market are reacting to either news from as a competitor, as a earnings, news as outside the major news, any news that comes to the market, how are people reacting to it? What is the momentum? At the end of the day, it is stock closing on a buy sentiment or a sell sentiment. I need to understand so that this will inform addition the next day. But company releasing a number of us, for example, now we saw the one that came from Waku. It was fantastic. They declared even 3 dividends of 4 naira, but still that all we're saying is about what first quarter 2025. It has passed. I mean, it's a back, back action. But for you to know how the market will do, how this result that came to the market, presently that hit the market, how is the investor reacting to it? That is what you want to know. You can see that even the stock, when it tried to move as high as 84 naira, 85, it pulled down. It tells that investors have reacted to a level until it comes closer to what the market did. You as a technician, what will you do? That noted that if you are tested around 84, that means towards the end of the market down, or towards the market is likely to go up and touch that 84 and surpass it, depending on the market mood or market fundamental. Because any market was trading, company fundamental is for market fundamental. Liquidity is the major fundamental of any market you are trading, especially when it comes to equity. If there's no liquidity in the market, I'll tell you, if a company can release impressive number, movement cannot be more than a day or 2 days. But when the liquidity market, a company releases an impressive number, it might run for 4 days, 5 days, people reacting to that impressive number. That is why you must know the state of what the market, what the liquidity state of that market is very, very, very key for you as a trader or investor. Even when we are using your technical and your fundamental, these are things that you also have at the back of your mind that you must know at any given time that these are very, very important. Fundamental analysis focused on what? On the study of market action. Why fundamental also focus on what? Economic forces, supply and demand that also cause price to move higher or lower, also stay same. Also, the division also study the effect of fundamental factors on what? On price movement, like I just mentioned now. Technical analysis also set to know what happened. It's set to know what happened. Like I said, that we must look at the market. That is why in this class, I've opened a live chat also. We're going to look at what is happening in the market, even between this 12 o'clock to 2 or between 1:30 our class to see what is happening and even what has happened before now. Also see them that. That's why you must pay attention to what to take analysis, because it tells you what is happening live in the market so that you can know how to also adjust. It's also why fundamental study the cause of market movement. What has happened? We're looking at to make prediction. No, you want to follow the trend. That was a trend, your friend. What happened? You have to go with it. That is later you come and ask what caused it. But for those that are really smart investors, it is what moves the stock market. That is why at times I can trade stock that have no fundamental. Once I see momentum there, I go in with that momentum and also bail out. For example, now the fully listed legend that was listed on the this on Friday at 5 naira 64 kobo. When it touched today at almost 8, I hesitated because I made it just like 25%. I said, let me go. I don't want to follow because I know that the fundamental of this company is not clear to everyone. But because technical tell me that yes, as I say, volume coming up, I have to start selling out gradually, because the day everybody wants to sell and you are in the market, every day you come down, you not say, oh, I wanted to sell, I'm unable to work to sell, because everybody in the market wants to sell that same day. And that's why there's important what we call a trade plan. If we any successful trader that in the market that don't have trade plan, you won't succeed, because before you get any stock, you must set up your buy range, also your stop loss. Your stop loss is very, very key, and your profit target. And once you hit your target, it doesn't matter whether it's A is waiting or B, because you are trading your plan and your goal or your objective you have achieved. You exit, because the day everybody wants to exit that stock, become what a big problem for you to go out of that. So that's why you must pay attention to that your trade plan to guide you to make what informed decisions. Technical analysis is defined as what? As the study of which I've also said earlier, has to do with what chart, also the purpose of forecasting what price direction. Forecasting, that means we're looking at the future, and that is the beauty of what of chart analysis. What I'm going to do is so that when we enter the real discussion, where we're looking at some instruments you need, some tools you need, so that you will be able to make informed decisions. And when it comes to chart comes in different ways. That is why I said live market is very, very important. For we chartists or technical analysis, we have called mini chart, we have daily chart, we have interday chart, we have all these chart, we have monthly chart and weekly chart. And what does it tell you? Once you see a 1 minute chart or 5 minute chart, it tells you that in the last 5 minutes, this is the reaction of those in the market, and that tells you, give you an information. Okay, let's say a day chart tells that at the end of the day, from the morning to close of this trade for this day or this stock, this is what happened. That chart most time is the last thing that tell you is what we call candlestick. But it must give you information on what happened in that store. If you want to look at store what happened in a week, you can also look at weekly chart, monthly chart, on a yearly chart, or whatever. These are what will give you information on how you can also make information to know the next step to take. That's why it's very, very important. And also, there are two charting tools popular in Nigeria equity market today, which I would say many of you have access to. One is Metastock and Army Broker. One I use Army Broker, I use Metastock. Why do I use the two? Army Broker give me simplicity. Why Metastock also give me, but I want to get a details of more of the stock. That's why anyone you want to use, anyone to combine the two, you are free to also go ahead and use it effectively. It's very, very important when it comes to what investment. Also, when it comes to trying to get familiar with charting tools, you can go to any platform to look at what is the opening of Metastock, what is the viewing of different charts, what are there for you to see, because you are there to know what is happening in the market, and these are what will guide you to know these things is what every investor or trader wants to do. That's why I started knowing the time frame. We call it time frame when it comes to equity investment. Time frame to see what is happening for this period and for this period is very, very important. How can a technical analysis help you? For any dealer, there are many questions. Will I buy or sell or wait for a better opportunity? The chart will reveal all these things for you. If you look at the chart, that it opened on a low price and it went up, at the end of the day, it closed down, especially if the chart is trending up. If it is trending up, then that stock is about to work to turn the other way. But if it's trending down, you see sellers bringing the stock now, at the end of the day, buyers put it up. Then that strength is coming back to that stock. That's why this question is what you ask yourself by looking at what and looking at the chart itself. Because chart will explain this to you when you come to it. Because when you see a trend in the chart, because you are there to know the trend, the price movement, the volume, and the action of people in the market. That's why you must start thinking. If I decide to buy, what level do I expect the price to reach to get to before exit? And that's why I mentioned that you must set your profit target where I want to achieve. If you reach where you are, go. Whether Mr. A is making more than you, doesn't concern you because you have taken within your goal, you have exceeded the market. When do I cut up if I made a wrong decision? That's why your stop loss is very, very important because I'll tell you that if you have set a stop loss of, for me, those investors that will have a stop loss of 7%. Why 7%? Because if I made a loss of 7%, I know that if I move to any other stuff, I cut my loss, I will that I basically recover that 7% from the board. If you are making a loss of 20%, if you are a trader, for you to recover that 20% in any other thing, you have to also make 40% to come to pass. That means you must be able to know what works for you. But for those that are long-term investors, they are not looking at this because they know why they are buying the stock. Like Oracle said that if you can't hold a stock for a minute, don't buy it to move at all. That means for those that are long-term investors, they have seen something that attracted them to that stock. That's why they are buying and holding. But for trader, chart is telling you what to do because it reviews the activities of those in the market, where they are heading to and where they are coming from, so that you know exactly what to do as a trader or investor. That's why all investors take some loss. Why is some loss? Because you know that yes, the more you go into red as a trader, is going to harm you. Then that's why stop loss of 7%, maximum you can do is 10%. You are off that. But if you are a trader, investor, sorry, and you are listed, you can say, and let me move. When the second quarter results come or 20%, it will bounce back because you're a long-term investor with a long-term mind. You wait. But for us that are traders like me, I don't wait to run. That's why when I tell you that, so I enter at 5 naira, no, at 6 naira, at 25%, 20%, I off because I know that it's not less than how many days, not to up to 5 days. I move to another 10 in the market. That's why you must understand how to. That's how you can create wealth for those that are short term. But for long term investors that are accumulating, they accumulate for a long time. But for those that are going to look at what is happening in the market, in and out, most of the you investors. No, because you are there in and out, you are trading with what? With technology, you are trading with what? With information, and you are trading with pattern and also market what? No direction. That's why you must pay attention to all this. It's very, very important. No investor will 100% of his or her trade. No. And that is why nobody can say he must sell at the peak or I must buy at the bottom. No. But always buy at a good price. If I tend to sell at the peak, you stay in the market for too long. Because when we are selling, others have gone, you are still waiting. If you say, I want to buy the lowest, when the market deep, you can buy at a good price. That's the most important thing. Once you buy at a good price, you are good to go. In fact, if you win more above what? Not above 50. And that's why I tell you that you must not say, oh, I must be the one that will sell at the peak or the one that buy. No, buy at a good price and exit at a good price. Don't be greedy when you are trading. For those that are investors, they might also have that greedy nature, but after they also don't be greedy. But long-term investors, because they are relaxed, they might save for long. But you that is trading, you must find how to minimize your loss and also move toward profitable trade that also help you to grow long-term portfolio. Why am I having so? A trader that is trading, you are accumulating stuff for long term. That's why I said most time I don't know that you have to portfolio your long term and your short term. As you are trading, you are using your trading profit to accumulate fundamental stuff that you see that is good, that is good stuff that is good. You have to when they move, you smile. I remember when NAPO was selling for 7 naira. In one of my master class, I was telling the class that this is stock that will buy. In master class, we're going to make 100%. Walking into it and we also made that 100%. But I don't know they are taking percentage. Look at profit that you said now. This stock has full spread. You can see that now we have moved in the space of less than 3 years from as low as 79 naira to almost 72 naira. I mean, if you are taking profit gradually, you are not just selling down. This is what how you have long term portfolio. Why you are anything in and stock, in and out of stocks of other stuff. I remember when I bought the UPDC at the price of 90 kobo. I sold at 180. I said I didn't want to buy that stock. It goes as high as 280. It came down even below 1 naira. I didn't bother. That so that you can enter in and out. Generate funds to go and buy those long-term investors. Those that had DTB earlier because they bought on the long term. We are still enjoying it. But if I also trade DTB, like as we go to store DTB on the chart too. Like stock like DTB, when you are trading DTB, that's a stock that I know that in this market, anytime you mark down DTB in the chart, I know that DTB will come from that price. And it has been a pattern. And if you chart it, you know that, whenever they want to mark down DTB, you'll be prepared the day they mark down, you are buying. Because you also that a pattern in the chart that this stock will recover from what? From the markdown price. That you can trade that alone without knowing that information. You're waiting the day of markdown, you buy. Why you buy? Because you have seen for several years, because technically tell you that trend repeat itself. Because it itself that will come and not only you mark down DTB, it will always rebound. That also happen again for 2025. These are things that you should know, and that will help you all to know whether you have short-term trade or long-term black. I always advise to have two portfolio, one for your trading and one for your long term. Long term, you are buying good company, fundamental stock that will pay good dividend and all. But always have where you in and out to play. Any stock you can play for short term. But why for those fundamental, you are seeing the value in them and the also you are accumulating more. That is why you must pay attention to what? To price action, because anything you are doing in the market is price. That's why I say price is king. Price is king in any market, especially when it comes to equity market. Price, but it's the movement of that price that creates wealth, nothing else. If you buy a stock for 4 naira, remain 4 naira for 5 years, you have not created wealth. But if you move from 5 naira to what? To 6 naira, it has created wealth. For you move to 8 naira, that's why you must look at price and also what are the factors or problems that will drive the price. Or you look at the chart to see what will call momentum. All this will tell you that this stock is about to move or not. But because of our time, let me go so that I know that we're able to cover some, or the slide. Let's continue. When we say technical analysis, also referring to what, like I mentioned, like technicians studying what equity market using price and volume. In a more clearer terms, it refers to what traders' action on the floor of the exchange. E.g., buy volume, also you can sell volume. These are the things that we buy volume and sell volume. Why? Because you are buying, another person buy. At the end of the day, it becomes a volume or a numbers of D. And you want to see that volume, if it increase, something is happening. That's why I tell that when you see volume in the market that is relatively low or below average, nothing is happening. But when you see volume growing and trend is going up, something is happening. And when you see also that the market is really struggling or trending, tell you that institutional investors are not playing the market. That's why the volume is relatively small. When we start seeing high volume, you start seeing high cap stocks moving, it tells you that something is also happening in the market, so that you can pay attention to all this when we are trading, because they are very, very important. Activities can change when it comes to price. And when activities change, and you see that these activities also will bring positive movement in that stock, you also take action, because that price action is telling you where the stock is going. And also on the strength of what of the above explanation, you understand that because it is the activities of the buying volume and the selling volume that price move, you must pay attention to it. Because if price is moving and volume is increasing, that price will be sustained. But if price is going up and volume is sitting down, it's a matter of time. Price will go in the direction of volume. That's why these two things is things that you must put at fingertip anytime as a trader or investor, because it is the voltage that people are commenting more. You saw when Livestock released the price earnings yesterday, how market reacted to that stock. But why did I? Most of them are trying to sell off immediately to cut loss on the stock. But for those that are long-term investors, they are not worried that the stock don't release a niche number. Yes, consider the top line was okay, but the bottom line was down because of high cost of finance. How will it go to those that are short-term trader like me who hesitate to go and for elsewhere? But when we start seeing another trend changing from that stock, we'll start coming back. That's why you must look at price and volume to see what the next action you want to take. Is very, very important. On the strength of that book, like I said earlier, you understand that this they play interchangeably, whether price or volume. And so it's also used in this class. I've been mentioning volume and price as we go along in this class, so that you also understand more of our discussion. Yes, in presenting price action, there are various methods of presenting price action, namely either bar or candlestick, which I mentioned earlier, if you can remember. We'll have also candle volume, quick volume, and line charts, point and finger, etc. All of them are how to represent price on the market. But we don't need to crack your brain, because the software is going to do it for you. When you put software, anyone you want, it will show up for you. You want to use the candlestick, you want to use the line, you want to use a candle volume. Once you click on the software, it also helps you to do that. An example of candlestick is what I just displayed now. You can see how this candlestick. This tells you exactly what happened in a stock for a day, for a week, for a month, for a year, because every action of that stock will be represented in this candlestick. You have the shoulder, you have the called the weak, you have the body, you have the bullish, you have the bullish one. When you see a stock or a trend that is on green, depending on which platform you are using, green will stand for a bullish movement. White will stand for a bearish movement. Also, you can see that some people use the white as what? As a bullish movement and black as a movement. Depends on you what to use. But when you look at, you want to see a stock, what's the body of the stock? What is it? That will tell you that whether the bull is in charge or the bear is in charge. You must understand it, so that at the end of the day, you also know that the wind we are seeing, which is also this what we are seeing here, this wind we are seeing here, is also telling us a story that this stock moved higher before coming down. It's also moved like this before coming to this level. It's also just telling you, but we're looking at the body now to tell you what the body stands for. That the red one is also for the lower bearish, and while we're saying that the blue one is also telling about the bearish candle stick. You must understand all this. And this is the chart here to give you an idea of what we are saying. This is a candlestick chart pattern. You can see that from the movement from here, you can see that this is an uptrend. That's why the blue stands for what? For the bullish. Why the red also stands for what? For the bearish movement. We can see how the stock is moving because this is a movement of stock. As you are seeing all these candlesticks, it presents a day. You can see if you take a line, you drop from here to this is an uptrend. And this stock is what guarantee which is the GT code now as we speak. You can see the trend now. There is an uptrend. This is what we call a candlestick chart pattern. That is also very, very important for us to know. For three what we call it principle or alternate, whatever we call it, it's also what we all have at the back of our mind. That in technical analysis, what is that? Market discount everything. That means the fundamental you are looking at, you are jumping up, is already in the price. And price move in trends, like I just showed you now, and what and history repeat itself. I've mentioned it when I was explaining about what about TTB. And anybody can feel like you disagree or not. But I'll tell you that this is the assumption, the principle or the tenet of all technical analysis. If you have this at the back of your mind and you operate with this principle, you'll not be carried away that market is going up or going down. Look at everything is in the price. You pay attention to the price, and that's why trend is your friend. If it's going down, how can I trade in that market? Oh, the price is up today. I know that the chart trying to that this stock will still go further low. I sell at a good price and wait to see that where it form what we call the support level to buy in is very, very important. And it is trending up. And also you can see that fuel or the energy or the momentum that is carrying that stock up, looking at what the momentum indicators or looking at also the volume that is going. It shows that this stock is also bringing some kind of weakness. You sell off before the weakness becomes noticed in the market and you exit. Because when you are exiting at the same time, everybody is exiting, after you will become a problem. It's just like when you are in a party, you are in a room, they are playing, all of you are dancing. The person that is tired can easily go away on his own. Nobody will give him problem going out. But immediately they just off the music, people want to go out. That door will be jam-packed. People don't have no space. So it is in the equity market. If you have set a goal for yourself and the price, you hit your target, you exit easily. But when you see that because market is showing a sign of weakness, they want to say, everybody have seen that weakness, they want to say, it become a big problem for you to exit that position. That is why you must make sure that this principle I just mentioned, alternate also what will be at the back of your mind. That is why when we start seeing first quarter full year results in the month of March, you see market was coming up saying, it have a factor in, that factor in. Yes, market have rallied for the month of January and February. Expect that the profit taking is part of it. Yes, also they are factored in some expectation of these companies also in the price. But when it starts coming down, I tell you that market will always behave the way to go because it is investors, traders are different objectives in the market. People are taking position for expected dividend. People are selling up because they have made capital appreciation. As market is coming down, coupled with what happened in a global sense, that also put panic. We are seeing sell-off both international market and local market. That also put pressure on the market. We can see that now that we are seeing some better than expected earnings. We are seeing price try to recover, but how long will it go? Already, this is the first month of the second quarter. By end of May, April, by Wednesday, we have seen this number. Then we are now looking forward to see the March end account in the month of May. And also in Nigeria, is to know that May is a market that have defined all the principle that or all the market turning that sell in May and buy in October. Why? Because our market fundamental is different from that of mature economy. And then when it was panic, sell off all over the world. But then don't panic here to sell off. If you're in value stock, it's opportunity to buy more in deep. Because we know that the same fundamental is not what we're having. Those in the US are different fundamental. Why? But we're always doing the same technical to try. That's why you must understand what is happening in your domain by looking at the kind of sentiment, the kind of psychology of players in your market. It will help you to know exactly what to do, and that is how to stay ahead of the market. Technicians believe that anything that can affect price fundamentally, actually, or psychologically, what you call it, have been factored into that price. It will reflect on that price, and that is why as you are trading, minute matters, 1 hour matters, 2 hours matters, because we'll see activities in the market. Today, market open on a good note. It has gone up this morning, but if you look at the chart, I don't know that changed because I'm trying to enter this class. It touched a level before pulling back. It's a sign of weakness after market rally for almost 5 weeks. Then that people are taking 5 days, people are taking a profit. It is not that at the end of the market. It's expected that after market rally, profit taking is part of it. It comes down. But as far what market feed on, which is price, which is earnings, price feed on earnings and other information. If the earnings we are seeing are positive, price will not adjust below a certain level. Why? Because the fundamental of the market, in terms of company fundamentals are okay. It's not left on what? On the market fundamental, which is also the liquidity. company fundamentals are okay. That's why all eyes will start to be looking at what will happen in May, 19 and 20. But as a chart is, these are things that will be forecasted because we are looking at the trend, how it's going. If we can look at all the outcome of MPC meeting as a chart is what it was happened when it was a cut, what happened when it was a hole, what happened when it was high, what happened. That also inform how you're going to trade that period to know exactly what to do in the market. That's why you must pay attention to this trade assumption because I tell you these activities are what also will shape the market. Slight limitation to this assumption as concerning the Nigeria market is that our daily price is controlled. It's controlled. Why? Because market cannot gain more than 10% and that of can lose more than 10%. Even that, you can see that it's also to a level you can use it. But in a mature market where it's an open market can go up, you can use it. But because you understand that in a market that has built at 10%, also it's going to control your reading of the market. The way the guy that will read market in the US and one of there, it might be a little different, not different too much. Why? Because our market is regulated in terms of price movement to a level. But then they can make as high as 20% in a day. They can also lose it at 20% in a day. But it all depends that what you understand on the market and how you apply what is assumption in the market. Combination of price action must also follow a particular direction. And that's why you see an uptrend I showed in GTB. Also, you can see also coming down unless one of assumption in this promises that market do not move in trend. And that cannot happen anywhere. Market move in trend. That trend is that is why we can study technical analysis. If market is not moving in trend, it's not moving either that trend, uptrend or side trend, there's no need of studying technical analysis, no need of studying psychology of the market. Because this is happen, that's why we pay attention to it. Technical analysis software are also instruments that you need to study the psychology of people, investors, reaction are also to fundamental stuff. But you must know that this chart is not one somebody is drawing. It is the software that is reacting to the market. That's why I said market have gone technology for a long time. But these days in Nigeria, we have already embraced it since Oscar came on board and we are seeing a lot of changes in the market. And now we have our chart, our market prices in the chart. That means we can read what happened before now to see the trend of this story. Then we must pay attention to chart to study what trend as it reflect what is happening in the market. You must pay attention to these basic things, as I've said earlier before now. The history repeats itself. Why is this very important that I was playing this off? For example, we know that any season comes 4 times in a year. How will this work? That you know that at the end of first quarter there will be any season. That means if you are really want to choose to trade any season alone in the market, that means once any season finish, you relax, you get away from the market. And there was a video I did on how to trade any season. The day we put it to the market, I was surprised the number of people that really for that any season. Why? Because they've seen that if you are trading any season alone, you can make money in this market and sleep very well because you know why you are in and when to be out. After that, one is for traders, but for those that buy for dividend, you also know when to enter for dividend. Although that was explained in that about that. Any season is very, very key because it's going to change. Also, weather changes. You know that no matter what happens, weather changes. Like we speak now, we're already entering the rainy season, we're entering also after the dry season. These are things that change, and also it affects market and also activities in the economy. You know that rainy season, there are business that will flourish that also you can be looking at to see the end of this company at the end of that season, that rainy season have affected them positively. Also, there are business that this rainy season is going to affect negatively at the end of the day. Also when summer also want to that period going to boost some business activities, you also be looking at to see the numbers of because at the end of the day, you have higher sale because of what the weather. You must also know that it will come. Economic indices release seasonally or release of season. These are what inflation data, which you know that this consumer price index is very, very important all over the world because it gives an insight what will guide the MPC or whatever you call it, other Fed call it, to take their word decision on rate. Because it is MPC that they use to monitor economic activities in a shorter period. That means you as a trader, you must factor that this thing will repeat itself. How does it happen? When they go positive, how the market react? That's why you must see that trend repeat itself. You have to look at it that if it is negative by hiking the rate, so that the market react to it. Because anywhere in the world, when there's a high interest rate, it's going to affect the equity market. Because funds will leave out to the market to another market. That's what called secular flow of funds. Once they will leave in equity space to another investment window. But when you see that rates have been adjusted towards our or being rated rate code, see that people will look towards market because other instruments, their rate will because the MPR is very, very important. And also, if your costing rate go to boost company access to funds, I said better that they will do better. Like example in Nigeria, where we have seen that our companies have even performed excellent, even when we are experiencing economic headwinds. There was a time that when also they were having a good access to cheaper funds, what they will do. For me, that's why I said anytime, any day, I'll tell you that corporate Nigerians are really doing well because we are seeing the impact on their performance, because they are able to take advantage of what is happening around us in Nigeria to work to make policies that also affect their bottom line. Yes, I think that MPC meeting will come every 2 months, anytime, any day. Election, that 4 years it will come. Don't forget that also festive period, either Easter or what, or Christmas, it will also come. These are the things that will repeat itself. Like I mentioned, trend in general sense, this is what really is the beauty of technical analysis. Anytime, any day, whether stock is trending up or down, is what you need to understand. But that trending is what will make money for you. Buy the stock at 1 naira, it's trending up to as high as 3 naira. You have made almost 200% on that stock. You must see. And this trend can be a zigzag trend, and that is why we have volatility in the market. That either market go up today or go up for 3 days, go down, go up again. That stock become very trendy. You cannot plan to buy low and sell high. That means you are paying attention to what to trend, and that trend is being formed by price and also the volume that is going behind it. That means you must pay attention to this trend. That is why, as a good technician or a trader, whatever I call it, you must understand that trend is what you must pay attention to. It's very, 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 very important. Market generally does not move in a straight line, and that's why if market is moving in a straight line, this company that organize this program will be complaining. But if market is flat, there are no activities. You can't make commission. Nobody wants to trade because price is not changing. Are they selling? No. If they want to sell, it will be activity. But if market is going up, people are making money because they are selling, they are buying more. That is where the stock of market operators will make money. The traders will make money. That's why when market is trending or market is moving on a straight line, it doesn't make any money to any investor or any trader, because the other time you are not making money. The other market is going up, everybody to do that. It's coming down for you to buy lower. And that's the beauty of stock market anywhere. It is this wave that also creates money for us as traders. That we must pay attention to the market. In other words, it is the direction of the drop and peak that constitute what the market trends, which also this example of it. You can see a trend line here. Now you can see how it's moving up here. The good thing is that it moved up here, even when it pulled back, it didn't pull back to this level. That is that this is an uptrend. And when you do an uptrend, if you want to know that this is an uptrend, you take a line, you drop up down here, it is an uptrend. But you see a downtrend when a trend is below a trend line, that is a downtrend. But when a trend or price action is above the trend line, that is an uptrend. Which is also we have seen like this. Even when it's here, you can see that it's coming down. It didn't come to this level to come to this level at this level. If this one has a coming down like this, this have repeated a trend that we have seen this is a movement level before coming down. But because it went to this level, it continued and uptrend. And that no matter what is here, it's higher than this level, even when it comes up and down. That's why you must understand why the stock is trending up. What is good here that as it's trending up like this, as a stock or a price, look at what the volume that is behind it, the uptrend or the price. That will help you to know exactly what to do. Like here, type of trend, which I've mentioned before now, that have the word uptrend, downtrend, and sideways. That sideways trend does make money for anybody. Why the downtrend creates opportunity for you to buy, why the uptrend we are cashing out. It is that in Nigeria that downtrend moves that people, but in abroad where you are trading market, you can trade that market also to make money. But personally, I tell you, I also trade my market here in Nigeria to make money. Why? If I have a stock, I know that yes, for example now, you have a stock that is trending up. You know that, oh, this company at this point, I've seen that I touched the peak because you are using the external level to do that. You not sell at that peak. I see that stock coming down again because the energy or the moment I put that stock to that level is weak. That coming down. What you do, you wait to also buy. When you are going to buy more volume than the one you sell, automatically if you have not made more import, because the numbers of that if you already made money. That's I think that we also understand when we are trading the market. It's also very, very important. You can see also type of uptrend, which I've showed you up before. Very well. These are examples of also a downtrend. You can see it here. All these are for you to also have the basic of so when we are matching a thing, you must understand the rudiment before you look at what the becoming a professor in it or a master and expert in it. Once you understand the basic, you get what to navigate also what the thing you are trading. Like I started at the beginning, this is very, very important in technical analysis. If only this thing is what we discussed today and we go, we have gotten what you need to be a good technician. Others will be addition. Why? Because price moves in trend, resistance and support is very, very key. Because when a stock is moving up, it's moving on a force. I call it the velocity. And it gets a level, it stop, it come down. Also, it starts again on the next time again, it gets to that level, but that means at that time, that is what called the ceiling. At that time, that is the resistance level of that stop. And that's that stop will start coming down. Just that stop has formed a resistance there. But as it's coming down, it gets to a level that a bounce there, it went up again. A bounce there, that stop, at a bounce twice, it becomes what? A good support level for that stop. That means for what a trader, in between the resistance and the support level, that's what I call the value area that creates wealth for investor. That value area between the resistance and the value area that you pay attention to, because in that movement, you have to that is the movement that this stock at touch a movement, you can trade it in and out, in and out. Why the long-term investor are going to go, you are the technician, but you know, oh, when this stock got this price to bounce back, that is how you be trading up and down. And that's how it works. And if you're able to master it, I'm telling you, you are good to go when it comes to work, equity trading. I know I've talked more of what on trend for this one, but this return level is very, very important. That's why we must pay attention to it. And that is the direction of these peaks and the top, determine the trend of the market. You have said it earlier, up trending up or down. You must understand that once you're able to get this concept of what the resistance and support level, you are good to go when it comes to what trading. Support level, the top and reaction low are what are called the support level. That is a level or area on the chart where the buy interest is extremely strong to overcome selling pressure. That's why when the chart will tell you when you see market selling down a stock, when you get a point, buyers put that stock up. Think at that level, buyers does not want that stock to go beyond that level. Pay attention to it. Pay what attention to it. It's very, very important. And that's also that when people in fundamental are using evaluation, they want to look at the P ratio, they want to look at the book value. I don't customers, I don't put more headache on that because I know that the price, the buyer and the seller agreed on the stock today. That's the value of that stock. What the buyer and the seller agree, even though this is high, but I see people are buying and selling that means that the buyer that they agree. But when you see that stock is coming down, to get the level, people putting that up. I mean, at that point, this stock has went out, either you call it oversold region or what. But tell that people are not ready to get that stock. That's why I think at this point, you must have it at the back of your mind. That selling pressure is overcome by what? By buyer taking advantage of what? Low price, and that price will start going up again. As a result of that, at this point, people are finding it will hurt that decline of the market. So that price will come back up again. That's why you must pay attention to what. And this example of what support level look like. I told you that this, okay, it's kind of like the call is also with, if you are familiar with what we call Elliott wave, this is also a form of Elliott wave. Because that this stock will move here, this uptrend is a resistance. But when it came down, it didn't touch this level, but it came down here and moved. Automatically, this level that it came will become another support level for the stock because it moved higher to another resistance level here before coming down. That's why it had form of it didn't touch automatically. Because if I say until it come here because it's form of a support level, no. Because it's the first context, that's why we have different support level. I say support level, it's a support level, it's a resistance level, it's a resistance level. Because that is the peak the stock gets to before coming down. And so in technical analysis, we say that wave 3 is a very strong wave. Wave 4 is a correction wave. Wave 5 is what we call a extension wave in wave 5. And that's why wave 5 is longer. Here, the markets are rarely as high as this if you understand technical analysis. But with this little knowledge we are sharing, you cannot build on it to know how to use all these Elliott wave. Elliott wave is only for what those experienced traders are using technical analysis. For the concept that is very, very general for both those are starting and those are the biggest. You must understand what your resistance and your support level. Once you're able to get this, I'll tell you that you are good to go. This is the resistance also. I think we have discussed this also. But I want to please tell you the word. Tell you like the peak reaction now at called what the resistance level. That is a price level area where selling pressure perform the buying pressure. Thus, the price advance is come back. Why? It's moving up. People are buying, but at the time, people are selling. When they are selling, they overpower the buyers. Price will start coming down. And this example of what of the resistance chart. You can see that this was gone down here, it move up here, then came down. You can see that here also got this resistance here. It moved up again, it didn't go up to this level. This one become resistance that coming down. You can see almost the same pattern, but this on what on the southward movement, why the initial one I will see was on the northward movement, so that you understand all these businesses they come to what investment. It's very, very important. Yes. These things that I want to understand them. Things to note, support and resistance level as a trader. In an uptrend, support and resistance level to an ascending pattern and vast facade, and also in a downtrend. Put and showed you with the movement of this put that I showed you earlier. These are this. In a downtrend, support level are not sufficient to stop what the decline permanently, but are able to work to check it at the low at the this temporary. Then in the uptrend, resistance level are not sufficient to stop the recovery of the market, because the market becomes also supporting permanently, but are able to check the temporary. Because these are the movement, you can see that even market can support this resistance, which is very important. It goes here, but when it moves, support this automatically, if it's coming down here and it comes to this level, this resistance can also form support level. That's why you must pay attention to where the stock is going. But the good thing that don't be feeding when you are trading this stock, really what you trade. Because we're looking at another perspective of looking at the market, apart from your fundamental alone, but you are combining the two so that you can go in and out of the market. That's also that you must have to portfolio, one for trading, one for long term. Because you are making your money from your trading activities in the market, you also buying stock into value that also will take you. In that you are making money in two ways. Because that one you are buying for long term is also giving dividend, also appreciating. What we are going in and out is going to catch, like we go to come and go and stay with here in those of I know that we are buying stocks that have value. What is that when it's a general market, it will affect those stocks that have value and those that you are trading. But for traders, even in that market, the bear market can be making a little of those that are long-term investors in a bear market, in wait for too long. For you as a trader, you can make small money, you might be making lower than what you are doing when the market is up. But if you understand technical analysis, even in that market, you be making money in and out gradually compared to what is the bull market. But that is why you must understand this knowledge behind what technical analysis, and when they call up upon it, I say it's a good thing to share with both the staff and all their work, all their clients, because it's a way of opening their eyes so that you must go for knowledge. Yes, you might go beyond this level. Let me go and look for how I understand it and also start trading. I say that there are people I know today that I would train in our company that are doing trading as business. They don't go anywhere. They need to run their business, to run their family, Facebook, they are trading alone, and they are surviving. I know a time, me personally, I was not doing that and only trading in the stock market. And today, I'm still doing it. So that means if you master the game of trading, you can make money in the market, because that is the way to make money quicker. Yes, also when the market goes against you, you might be crying, but I tell you, when you're winning games in trading, it's hard than you're losing games. You're already in profit. In a trade of 6 trade, you are making gain in 4, you are losing 2. You're not doing bad. You make 3, lose 3, then you're not up to you. Not to why did I lose? You change your strategy. That's how to trade. But for your buying for long term, you are keeping that. You are telling me that, oh, you want to pay school fees, you don't come and tell me that you want to trade the market. You first. You want to trade that, you are saying that you have a purpose for it. But you want to use your students' school fees to come and trade. And if you lose, what going to do? That's why if you are trading for long term portfolio, know that you are using money that you don't need. But for those who want to trade, you are saying that this is my capital for trading. I want to put it for a purpose. As a course I attended in the US, that course I met a girl in that course that said he has 6 accounts. I said, why 6 accounts? He said, 1 is how to take care of our aging parents. Say 2 is how to advance our academic, and why don't I to support our husband? The other one to train our 2 girls that they have. Another one is how to work, to plan to build for our, for our own self and our family. Say, this is a girl that is also, your goal will determine the kind of stuff you buy. That's why if you're a trader, you pay for from where and know where you put them for different purposes. If you are trading for to build that, you're not trading to build that, you have a goal of 5, 6 years to build that. That means as you are trading, you are buying kind of stock that you know before that is there, if this sense demand, this good stock will give you value. That's how to plan. I think that people don't plan with the market. I think that you can plan with the market, especially now that we're not having foreign investors competing in the market. Before you cannot plan with the market, I'll tell you, now, where the foreign investor will come in, they go like mad, come in, price goes up, foreign investor now. If you apply the market, but now that our market is relatively stable, that is since post COVID-19, we have seen that it's coming up gradually, and also the company on exchange are doing well. That means you can plan to go with the market. As I was saying, for an uptrend, for an uptrend also to continue, you must also pay attention to it to see where the dip will come and buy into the dip. It's very, very important for us. You must understand it very, very much. And that is why any corrective dip in the market, it's the time for you to buy it. Don't be panicking. Yes, if one market is going down, I see people calling me, market is going to say, why do you expect market to remain up? Anywhere the market not remain up, market not remain down. It's an opportunity to buy low and sell high. If it's an opportunity, exit and come and buy. Not that market is going to be finding. That means your priority, your plan, you didn't do the proper plan, or you are using money that is not supposed to pay the market to trade. That's why you must have a plan not to pay the market. You must have a plan. That plan is very, very important when it comes to what trading market. Once you can do that, you are good to go. But talking of the case of, I think I've worked on this uptrend and downtrend, looking at your resistance and support level. These are good things. But other things that you need in the market is what I want to quickly look at. Because apart from resistance and support level, that shows the vast no moves of this market. You also understand that there are other indicators that will help you. For example, if you understand how to use your moving average, how to use your MACD, all those things are the things that you need. Because when you are trading, you want to see all these things in the market. And that is why traders will always pay attention to it. Remember when I said that when the stock is coming down and it gets to a level that it touched this level here for the first time, it went up, come again, this becomes the strong support level. We call it technical analysis a double bottom because it touched here, it went up again, it came down. I mean, the second one, the product is going to go up its high. That's why for me, I'll be targeting for this stock to come to this level. Once you get out, I'll be ready to buy. And also, if you're not buying here, you're going to break up the last resistance I had. Now, what's bigger than a new trend has continued. That's why I said this is what we call a double bottom analysis that stop saying that this stock has strength to go up. You can also monitor it using your chart also at the same time to look at that same trend when you are trading. You must pay attention to all this. Also, when you are looking at charts, you see what we call a resemblance of M. This M what we call a head and shoulder. And in a chart, you see that are formed M like this. At this top, this stock, when you get to this level for the first time, at this top, the stock came down. It came down, went up again. That means this is a strong resistance for the time. This stock is struggling not to move above this. And as a trader, when it came down here first, and you are in here, when you get to here, what you do, I advise people that are trading that you take profit of 50% if you are in profit, because the profit that is going to come down here is high. But when it breaks out, because you take 50% profit, you are still having to run with it. But when you take profit here, if you come down here, you are not worried because you're already taking profit at this point. You're not waiting for it to come here and go up again. That's why you must plan your game or your trading anytime, any day, because that will help you to make what informed investment decision. Because we are watching at the market, we're looking at what is happening in the market. These things are very, very important when it comes to that. That's why head and shoulder is very, very important. We also have a double bottom, as I mentioned, I showed you earlier. One thing I think that the importance of resistance and support so that you know how to also navigate there. You see here, this is a chart that's coming up here, the price action, but you get here, stop. This is a shoulder. It came down here, it went there again, stop. You can see that at this point, it's almost from that MO, but it came here again, but it didn't touch this level, it went up. We now, I mean, at this point, is the resistance of this stock. That's why I say head and shoulder. That's start coming down. That means anytime you see stock coming this kind of trend in your trade, you need to trade with caution. And at that point, try that you take profit before the stock start coming down, because definitely it will come down. But when you see that sellers are more than buyers, it will go down. I told you about the double bottom, which I show you the chart up there. What problem is that at the point you see that the price it got there 2 times, hit at it 2 times at that level, the next one is that it's going to take off. So that is called double bottom. Double bottom account for when it stop, drop to a similar level, price level twice in a few weeks or months. That's called double bottom. Like that stock is top to bottom. You can see that the symbol here is what is W. You see, it touch here, but you are waiting for some people who buy at this point. Whilst we're waiting for this stock to pick up this place, this here, and it jump in. You must understand this thing. Once you're able to understand this thing, I will tell you, you'll be happy trading the market, and you will also trade the market with confidence. And that's the most important thing. When you're trading the market with confidence, no matter the direction of the market, you'll be able to adjust your position, adjust your portfolio to know where to stay ahead of the market, also to make money. You must pay attention to the double bottom because it gives you a lot of money. If you buy low and it rallies up, that's why I don't joke with double bottom when it comes to what to trade. And also when it comes to also, head and shoulder, I knew that at that point the market is likely to go down, and it also jump out immediately before. I see example of double bottom here. I see that the chart was coming down here, it went up here, came down the same level, can look at it also came here, That's why it's called what? A double bottom of it. Another one is Fibonacci. Fibonacci is also an advanced resistance and support level. Why? Because it helps you also to know if the stock is coming down, where to touch and it go up. So it's pulling back, where to touch and move up. That is why you must also pay attention. But this is an advanced indicator for what? For resistance and support level. Hello. Hello. Excuse me, just 2 seconds. Okay, my time is fast spent. Then what I will do now to round up this course is that when you are using your technical analysis and want to combine with fundamental, at this point that's where I want to round up, so I pay good attention here. You know, in fundamental, we tell how we call it over price stocks, or have under price stocks. In technical analysis, when market is at overbought, that market is about to fall down. And you know that in fundamental, when they say this stock is overpriced, say that don't go near that stock. But that this stock is underpriced, you've been thinking of Israel to buy stock because of that price. In technical analysis, when you hear overbought region, say that this stock has entered a place that yes, the price is likely to start coming down. Even the general market, where you are like index alone. And when you see oversold region, and because of our time, we have studied how to use your relative strength index to know how to see the overbought and oversold region. But I think also the company also make another time for us to continue in this platform. Gradually, we'll be sharing how to understand this technical analysis, so you can use it to. At that point, once you understand that this overbought is where you don't need to jump into the market. But oversold, you know that market is already at over. People are likely to jump in. That's where you buy. When our market was coming down, I saw as well as seeing money flow reading almost 14. Say that funds have left the market. That's the time for it to jump in. But now market money flow have gone back to almost 59, getting to 60 from 14. The funds is back to the market. Understand all this to see how the market is going, and that's the best way to go. Because of our time, I have a lot here, but let me quickly round up this back again. Finally, for the day. In conclusion, technical analysis is a particular approach to investing that will appeal to investors and traders. Not most times, investors do not look at it, but I tell you, if you have interest, this is the best way to go to get money in the market easily. No, yes, long-term investor is good for different strategies, but for those that understand how to trade, you need technical analysis to do it effectively. Whereas most investors concentrate on what the fundamentals of the company, the turnover, the profit. These are they are good, but the technician is more for price step. And as I say, price is the king at the beginning of this discussion. On this note, I'll say thank you and God bless you all. Yeah.
Wow, thank you, Mr. Amber. Honestly, this is a knowledge pack section for us. I mean, there's a lot of things I've been writing and jotting down, and I'm very sure everyone on this call gained one or two things. And so the good thing that we can go back to this recorded section and listen again and hear what Mr. Amber had to teach us. I mean, he said price is king, timing matters in in the stock market, and also as a good investor, you must be able to set a benchmark for your profit target. And he also mentioned that there's nothing like 100% win. As an investor, you must understand that there's nothing about like doubling your money. So all the likes of the Ponzi scheme, CBEX and co, it doesn't work. So we have to focus on the stock market and ensure that our money grows and our portfolio grows. All right, thank you so much, Mr. Ambers. Okay, so because of our time, I will have a few questions for you, sir. Okay, so there's this question from Kadiri Victor. He said, please tell us more about the chatting tools. Are they free or paid for? Does it need a special training to use these chatting tools? Then he also said something about peak or peak. I think he was talking about when you're talking about the market trend and all that. So, Mr. Ambers, please can you answer that? Thank you.
Okay. Now, when it comes to the starting software, there are free ones on some site like TradeView, investing.com, you can have access to see Nigeria's market there, and you can chart them. But because in that level, there's an extent you can use it. But if you have your own software, like the Army Broker and the MetaStock, you can buy whether online, because you can contact us how to get it for you. That one, you need to have it on your laptop. Then you now set your own strategy on it. For example, now I have set strategy on my chart that when the stock touch here, that's where I want to exit. When it touch here, that's where I want to buy. And when before I go to bed every night, I want to go to chart, open it and see, oh, where did this stock go today? If you see within, I mentioned what we call a value area at the point I was talking. If I enter a stock at at a support level, I think I see that value area. What that means, I'm waiting for it to hit what the resistance exit. And then I don't need to be watching, sit down with the laptop. I've said it already. But on a site website, either on a trade review, or you can't, because it's not your own. As the system work, that is why for life you can go to that chart and chart. But if you want to have a strategy that you want to trade, and you want to keep it in your system, that's why you need to have a paid one. The paid one is Army Broker and also the MetaStock. Either you buy it online or you can contact us and get it. Yeah.
All right, thank you. I hope that answers the question, Mr. Victor. All right, so I mean, we can still reach out to PAC Securities for more details about the stock market. What can I invest in? How am I supposed to understand the market trends? And our phone number, email. Here, we'll also drop the link in the chat room for you to access. All right. Okay. So, Mr. Abidemi, please give us the closing remarks. Thank you.
Especially, I want to thank the lead or the guest presenter for today, Mr. Ambush. And I also want to thank all our esteemed clients for making out time out of their busy schedule. And I also want to say, you know, our contact details, our contact number, our email has been dropped in the chat box. Should you have further requests, further inquiry, how you can reach us, like I always tell all our clients, they can reach us from anywhere. Just a simple instruction. We will carry out your instruction. I want to thank everyone for attending this webinar. Thank you very much.
Thank you for your time. Yeah, bye.
All right. Thank you very much, everyone, for joining us today. I hope we'll hear more from you. Mr. Ambrose, thank you so much for your time and also for this insightful section. All right, so this brings us to the end of this webinar. When we have the recorded version ready, we are going to share with you, and we also hope to hear from you and also trade leads, PAC Securities. Thank you very much. Enjoy the rest of your day.
Thank you.